Hello, my name is Steve Bigelow with the Candlestick Forum. The market is still in an uptrend, and now we can see what the nature of the market is. Today, the underlying analysis is that we know the uptrend is in progress as long as the indexes trade above the T line, a very important analytical factor. But note how the Dow, even though it traded up slightly, was trading well below where it opened. This kind of gives us the indication that there may be a choppy move to the upside, but still an uptrend. At the same time, when the Dow was trading below where it opened, the NASDAQ closed much stronger. This also allows us to kind of analyze the nature of the market, being that there's going to be specific stocks and sectors that are going to lead the way. Fortunately, we can do the trend scanning of specific stocks to see which sectors are going to be the strongest. We're getting a lot of J-hook patterns. Goose is still running strong for us. It did a bobble breakout, which is a more defined J-hook pattern, where the J-hook occurs right at a resistance level that you can see the resistance, and then the breakout. Consolidated, never closed below the T-line, now in its next move to the upside. Just high probability analysis using the patterns. We recommended EHTH today based upon a J-hook pattern that if it opened positive today, breaking this level, it was also confirming a J-hook pattern telling us there was much more upside. This is not rocket science. Anytime we see a pattern setup, we could see last week in DraftKings how we had the J-hook pattern that supported right here off the T-line, coming out of a fry pan bottom, creating our classic pattern, which also confirmed today that we're still in an uptrend. Apps, another one that was doing a little J-hook pattern, and look at our doji sandwich, a very high probability trade setup or trend setup that tells us we've got more upside. If we have more upside, it broke through this level, telling us wave 3 of our J-hook patterns in progress. Because of the patterns, which is the reoccurring reactions of human nature, we're allowing ourselves to analyze where the high probability moves are going to occur. And not only high probability moves, but the magnitude of the move is much stronger because we know what the results are of pattern breakouts. We also know when to cover short positions. Notice when they had the bearish engulfing signal in Tupperware. If you were short, when would you start covering your short? Your stochastics in the oversold area, a morning star signal forming right smack dab off the 34-day moving average. The probabilities are going against you with an upward market and a morning star signal. Today would have been a good day to take your profits. This is just common sense analysis put into the graphic analysis of when investor sentiment is changing so you can close out profitable positions. As long as we're above the T-line right now, you have to assume the bullish sentiment is bullish. That's pretty redundant, isn't it? But the sentiment is bullish. We're in an uptrend, so that way we can scan for which stocks in sectors are going to act the strongest. That'll be it. We'll see you in the chat rooms. Mark your calendars for October 17th and 18th. We will be doing a 2-day training on how to utilize the T-line, where you might make good profits using candlestick signals and patterns. You'll make great profits utilizing candlestick signals and patterns and analyzing against the T-line. Thank you for listening.